There's a common assumption in coastal areas that the biggest risk to your home is the next storm, but structurally, that's not always where the exposure sits. The greater risk is often how the policy is structured before the storm ever happens. In coastal North Carolina, coverage is layered. Wind may be written separately. Deductibles may be percentage-based. Rebuild values are adjusted based on construction modeling. Underwriting guidelines shift quietly over time. So two things can happen at once. Premiums can rise and coverage terms can narrow. Not dramatically, not obviously, but incrementally. A deductible moves from flat to percentage. Roof coverage changes from replacement cost to actual cash value. A water endorsement is modified. None of that creates urgency on its own until there's a claim. As a risk strategy conversation, the question isn't, am I insured? The question is it structured to perform the way I expect it to if something significant happens? That's a different lens. In coastal markets, the details matter more because the exposure is different. If you haven't reviewed how your wind is structured, how your rebuild value was calculated, or how your deductibles translate into real dollars, that's where to start. Not because something is wrong, but because coastal risk should be intentional. If you'd like a second set of eyes on how yours is layered, we're here.